So, Very Good Foods is a Canadian company who are uh, who are from Vancouver, BC. And let's quickly look at the stock price for today before we proceed further. So, as on today, December 1st, 4 p.m. Eastern Time, the stock is trading at just over $6.70 Canadian. It's down 90 cents and 11% for the day. Uh, Now let's look at the stock also trades in the United States with, yeah, this is the symbol VRYYF. So yeah, it trades on the OTC Markets. The symbol is VRYYF, Very Good Foods Company Limited. So the stock is trading at $5.23 USD. It's down 60 cents and 10% for the day. So let's quickly jump into Yahoo quickly to look at the financials of the company. So, the company name is the Very Good Food Company, INC. It's based out of Vancouver. I'll get there in a second. The market cap is $443.91 million, and the stock has been trading quite remarkably for over a time. I'll just show you that. Just give me a second. Let's go back to Yahoo, Google, sorry. So if you see here, right, so look at this. The stock was trading at almost less than $1 on 18th of June, and it started picking up all the way to 1.5, 2.5, a small dip, and recently in November it was trading at around 4.13. It had this huge run up to all the way to 6.70, sorry, 7.60, before dropping down to 6.70. So that's where the stock is. The 52-week high is 8.90, okay, and the low is 6.24. The market cap is 596.57 million is what Google says. Difference between Yahoo says 443, while Google says it's 596. Anyways, let's move on. Let's continue. So let's quickly look at what exactly is this Very Good Food all about. It goes by the name the butcher shop as well. So I'll just give here. So as you can see, they're running a few festival offers. Order by December 1st to receive your order by Christmas. And let's head back. They had a few promotions when I was having a look at the website recently. So it looks like they had it right here. So anyways, let's look at them. So they have all these butcher boxes, holiday meats, individual meats, cheese products, merchandise, gift card, shop all. Right? Let's go to shop all. So as you can see here, right? The Very Good Food Company is a plant-based meat alternative. Like now the vegan trend is quite huge. Let me go to Google Trends and show you how good the market has been for the vegan especially. Let's go to United States and let's search for vegan. So you can see the trend here. The trend is quite good. You can go to the past 30 days. The trend is good again. The Very Good Food. All right. So these are their products. So they have very good reviews. Holiday meat box. I mean, look at the reviews. 189 reviews, 5 stars. 818 reviews, 4 stars, 5 stars again, and you have 3 stars, 4 stars, 5 stars. You have 5 stars. Like you have an interesting lineup of products. All of these are completely vegetarian, uh, and they are healthy, good for the environment, and overall, yes, it's good. So let's quickly go to the investors page. That's where we are interested on, right? So let's go there, and yeah, who we are. We are an emerging plant-based food technology company that designs, develops, produces distributes and sells a variety of plant-based meat and other food alternatives. Our mission is to employ plant-based food technology to create products that are delicious while maintaining a wholesome nutritional profile. At the Very Good Food Company, we believe that making good choices doesn't mean sacrificing flavor or giving up the things you love. All right, sounds good. And in case you don't know, if you did observe this when you first saw the stock price, the stock does not trade on TSX. The stock trades on, one moment, the CNE. CNE is the, one moment. The stock trades on CNSX. All right. So in case you're wondering what the CNSX is, one moment. CNSX stands for the Canadian Securities Exchange, which is like the Toronto Stock Exchange, or the TSX is the widely known and the most popular stock exchange in Canada. CNX is very similar. It was recognized as a stock exchange in 2004. The CSE began operations in 2003. The Very Good Food Company trades on the CNSX with the symbol VERY, all right, VERY. So let's quickly go to the Canadian Securities Exchange and search for. Let's do this. Sorry. Yeah. So we need to get this link. Yeah. Yeah. Canadian Securities Exchanges. So this is what I was talking about. The company's address is in Victoria, Canada. This is their website, verygoodbutchers.com. Listing date was June 16, 2020. And this is how the stock has been trading for the past 3 months, 6 months, and yeah, started trading only from June, right? Or July, whatever, yeah. So, anyways, let's continue. The, uh, the stock, the Very Good Food stock. The thing that I wanted to talk about today is first, let's open their recent uh, their recent quarterly report, right? Yep, this is the one. All right. So condensed interim consolidated financial statement for the 3 months and 9 months ended September 30th, 2020. All right, everything is expressed in Canadian dollars again. All right, the Very Good Food Company. So let's quickly grab down. Let's come here. As you can see, they're comparing December and September. All right, let's quickly go for the current quarter. All right, so the December quarter was 8 million in cash because they sold quite a bit of a stock offering they did, and they got around $11 million, I believe. Let's go to that, but before that, let's skip this for a moment. All right, let me go to the bigger part of this. Where is it? Mm, no, yeah, this is what I wanted to show. All right, so look at the revenue comparison between September 30th, 2019 to September 30th, 2020. All right, so the revenue was $1,393,234 as compared to 229,921. That's a major bump up, right? That's amazing. And the cost of sales is $887,000, and the cost of sales for 229,921, I mean, in the prior quarter was almost 169. That's more than 50%, right? But look at this. The sales have gone up by almost like how many times? Like 6 times probably compared to this. But the revenue, but the cost of sales has gone up by say 4x probably. Yeah. So they're actually increasing the gross profit here from the looks of this alone, right? because the cost of sales is less as they're scaling up in terms of revenue. Next, so even though there is total operating expenses of $4,212,963, majority of that loss was spent on $1 million for advertising, which is which is like quite it is required, right? It's a new company, and you got to advertise on the digital platforms, right? Be it Facebook or be it all these Google ads, or you got to advertise, and you got to make sure that the company's name is being heard of, right? So in the previous year, they just spent like $5,000, which was nothing, and now they're spending $1 million on the advertisements, increasing their brand awareness, and also making sure that uh, people know about the product, right? And also giving out promotions in terms of the Christmas offers, in terms of the 10% coupon code which we saw. So just so similarly, so this is going to reduce in the coming days. I'm sure of that as the brand awareness increases. I'll come to this in a second. And the bank charges, and we'll go about these in a while. Investors relations, because they started trading on the stock exchanges, so they had to spend this again. Many other expenses, which are, I think, pretty much a one-time expenses. So the net loss comes to around 4,497,000, with loss per share of 0.06 dollars or 6 cents, right? So let's quickly come down to nothing here. Just want to share one of the main important attributes, right? Let me just come back to this. Not this, sorry. Let me just come back to this, and or else let's just go through this. Maybe they have what I'm looking for. I'm looking for one particular statement here, right? So looking for few of things which I just want to let you guys know. Not this, not this, not this. No, they talk about all the leaves, and no, it's not this. So let's quickly head back to this, all right? And I'm looking for one particular report. One moment. Yeah, maybe this is what I'm looking for. No, this is about their new president called Anna Silva, who joined in from uh, Daya Foods. Like, she served as a CFO there, and Daya is a Canadian-based company that manufactures plant-based dairy alternatives available at more than 25,000 stores across North America. Uh, During Silva's time, I mean, the person joined, Anna Silva, during her time with with Daya. I hope I'm pronouncing that right. The company underwent a Canadian 405 million acquisition by Otsuka Pharmaceuticals, a Japanese-based pharmaceutical and nutraceutical company. So, anyways, that's not what I'm looking. This is what I went on into, right? Okay. Oh yes, this is what I was looking for. All right, fantastic. So this is in continuation to their Q2 results. Already, it was filed on November 16th, right? As we were talking about. So look at this. This is the key financial highlights, all right, of the Q3 2020, of the recent quarter that ended, right? So the revenue of, as we saw, $1,393,234, with growth of 26% over the prior period and 322% year over year, right? That's a massive growth, 322%. Next up, gross margin. This is what we were looking at, right? Cost of sales. Remember, cost of sales. The revenue was the first, the cost of sales, and then it was the net profit, right? What they made. So look at this. The gross margin of 39.2% as compared to 28.7 in 2019. That's huge. That's amazing. So as their sales grow with this kind of a profit margin, gross margin, their profits is going to multiply by bounds. So this is really an important metric, right? So production volume sold of 126,000 293 LBS in 3 month period, an increase of 37.2% compared to the prior quarter. So that's amazing, right? 37% growth in terms of the product, and the volume sold was 126,000 LBS in terms of the production volume, right? Total assets of $15 million, including a cash balance of 8 million, right? Outstanding debt has been reduced by to a remaining balance of 40,000. That's again great. Net loss of 4 million, as we saw, because of the advertising cost was a major factor of it for $1 million, right? Uh, so CEO Michelle Scott says we're particularly happy with the results. Okay, let's continue. Key corporate results. So this is where things get a little interesting, and this is where I want you guys to have a look at. All right. On August 31st, 2020, the company signed a lease for a for a production and distribution facility already built out for food production located in Patterson, California. So to give a heads up, right? This is a Canadian. So the Very Good Foods is a Canadian-based company. Okay, they are not yet located in the US. So this is their first venture into the US. Okay, and they've already bought. So the Patterson facility will supply the US market long term, and is expected to be capable of producing 98 million lbs of annualized product. That's huge. At the moment, they're producing less than a million lbs of food products, right? Of plant-based food products. So the facility that they've purchased, the Patterson facility which they've purchased, right, can produce up to 98 million. That is like 100-fold, maybe even more. Previously disclosed 28 million, but yeah, more than 100-fold easily, right? Almost 1,000 folds. I don't know, maybe 100 folds. So various initiatives are, so we spoke about that Anna Silva, right, who is joining Very Good Foods as their CFO. So she's currently undergoing training for the next 6 to 8 months, and she'll be in charge of this particular facility once it's up and running, right? So, and she has a ton of experience in these plant-based food companies, as we saw in the previous PDF document, right? So the next is, see, right now, Very Good Foods is operating only from their Victoria facility in British Columbia. Whatever they're producing, right, this particular 126,000 lbs, whatever they're producing right now, they are producing that only from their Victoria facility. Okay, and even with increased shifts, I'll talk about that in a moment. Let me read this orange for you. Various initiatives are underway to optimize the increase in production at the Victoria facility. Current initiatives implemented to date have resulted in a significant boost in weekly production volume to 11,000 lbs per week, at least a 20 to 30% increase again, like what they reported for this quarter. But the advantage of buying stock right now is uh, they have bought a new facility in California, the Patterson facility, which can produce about 98 million lbs of annualized product, right? And they're just working out of their Victoria facility. Even there, they're increasing the shifts of the production, and they're on track to reach 19,000 lbs per week, right? That is suddenly okay. Other important news is, so the company announced new distribution arrangements with Nestor's Market, Buy Low Foods, Sobeys. Okay, this is important. Very signed lease on November 11th to secure a new production facility in Vancouver. All right, this is not the Victoria one. This is called the Rupert facility. All right, this is a separate one. So already built out as a food production facility by its previous plant-based operator, the Rupert facility comprises approximately 45,000 square feet. Okay, and is expected to produce 37 million lbs of annualized product. You understand? It's 98 million what we saw for the Patterson facility, plus 37 million for the Canadian. Again, it's in British Columbia. It's called the Rupert facility, is what they call. It's in Vancouver again. The Rupert facility is expected to be capable of producing up to 37 million lbs of annualized product to be phased over the next year, representing approximately 2,690% 2690% over expected annualized production capacity of company's Victoria facility of 1,375,000 lbs per year. So Victoria facility can produce at the max 1,375,000 lbs per year, and the facilities that they're moving into is can produce like almost like X times the, you can do the math here, right? So anyways, let's look at this. Commissioning of the Rupert facility will become the key focus of the company in the near future. VRYYF plans to bring the Rupert facility online swiftly to address current production shortfall. So both these should be operational by Q1 2021 is what they say. The Rupert's facility operations are expected to commence in Q1 2021, which is hardly a month left, right? It's already December. So various products are currently sold in approximately 275 retail outlets, which represent 6% of the total number of retail stores of both smaller independent grocers and national grocery store chains, including Whole Food Markets, Fresh Street Market, Choices Markets, and IGA. With a waiting list of more than 50 prospective wholesale partners, the demand in retail is driving our expected change to sell 70% of various future production through wholesale channels compared to 20% year to date, with current gross sales per pound ranging from $7 to $10. Okay, average selling price per LB. So this was important. With a waiting list of more than 50 prospective wholesale partners, the demand is expected to drive further. So the revenue, as we saw, was a million. Gross profit percent. See, this is what I was talking about. It's 36.3% compared to 26%. And as the revenue increases, I'm sure this gross profit margin goes even higher. And even though you can see an operational loss, there are a couple of one-time costs in the third quarter of 20. So that was what I was telling about. The company needs to build advertising and promotion expenses for the month ended. So they're talking about the brand building awareness and increasing the company's e-commerce presence. Actually, they've also mentioned what percentage of their sales are e-commerce, and all those things are in this document as well. So I did see that, but you gotta go in complete details for that. But this is what we saw, right? Yeah, look at this. E-commerce sales were 14,000. For sorry, 14,000 in March, 57 in June, and 66,000 for this quarter. So that's a huge, right, compared for 6 months with only one facility. And wholesale was 18, 34, and 59. So amazing growth, right? One moment. So product innovation they're talking about, and so in order to so we were talking about that California plant, right? So the company signed agreements with three strategically located third-party logistics 3PL providers in North America to increase shipping speed and reduce associated costs for its e-commerce. So they've actually signed a deal with, and there's another important step here. So actually, they've signed a deal with a US-based company who is in charge of like making sure that their products are um, quick to just quick to reach the shops. Or just look at this. The company currently has this is Canadian news, okay? The company currently has approximately 275 active wholesale accounts with a waiting list of more than 50 businesses who have contacted the company. The active wholesale accounts include smaller independent grocers, restaurants, and national grocery store chains operating in British Columbia, including Whole Food Markets, Thrifty Foods, Fresh Street Market, Choices, and IGA, a number of which accounts we have secured through our brokerage arrangements with Food Broker, focused on plant-based brands for marketing and sales, right? The company has experienced strong demand for its products in these wholesale channels, and has had level and has had high level discussions with a large number of national wide retailers, right? So brilliant. So their e-commerce part, right? Accessible through the company's website, the e-commerce sells the company's products both individually and in box sets, which we saw in their websites. The box set, which are boxes? Yeah, holiday meat box. That's what they're talking about here. So, in addition, it offers a monthly Meat Club subscription. The company currently has approximately 1,000 active subscribers. That's good. Across Canada and in the United States, with new subscribers joining every day. The company's e commerce sales allow you to capitalize on varying streams of consumer demand by shipping products directly to consumers and transforming proven demand into recurring incoming stream, which is good. It's like the Apple iCloud or Apple Music, what we can talk about recurring income. That's always good for the bottom line of the company. So the company is shipping out 1,000 plus orders every week. Online orders are currently being limited due to production constraints. That's about that. Because they got into two new facilities, advertisements, share-based payments. So this loss was mainly due to, I think it's going to substantially improve going forward, and uh, their ongoing investors relations page. Right now that they've been listed, they have to report every quarterly reports, right? So outstanding shares are 88 million, 2 million warrants, and 4 million stock options. So yeah. All right, so that's it, guys. So coming back, the stock is trading at almost $6.70, and the stock has had an amazing run up since the past 1 month when the results were announced. It was at on 16th. Where was it at? 396. It was at, and post the results of the Q3, the stock has run up the stock had run up all the way up to 760, and it has since then. Today, I think it's come back to 670 dollars a share. Again, this is Canadian, right? I'll give you the information. And yeah, thanks for watching. And let me know in your comments below. What do you feel about the very stock? Thanks again, and bye now.